I want to talk about foreclosures and real estate. You know me, I love talking about real estate and foreclosures. I'm releasing a vlog today that probably gives y'all some insight, a lot more insight into what I got going on. And then I'm also vlogging again. So basically I'm vlogging every day at this point. But they say that foreclosures, according to some studies, are up and they're rising.
As more homeowners in the U.S. struggle to keep up with mortgage payments and maintenance costs, new data shows the number of property foreclosures is steadily rising. According to property data from Adam, foreclosure filings rose for 6 months straight year over year. And as of August, the number of foreclosures, that was up 18% from the same time last year. Those numbers put the U.S. on track to surpass the roughly 322,000 total properties that went into foreclosure last year. CBS News contributor Javier David joins us now. He is also a business editor for the.
That's the other part that people don't talk about is that you could actually be 20 years into paying a mortgage and then completely get your property foreclosed on or lose it to property taxes or all of this other stuff. And people don't talk about that. Unfortunately and fortunately, it's a cycle, right? Because one of the reasons why I love real estate is because it's one of the industries that you'll always have to have a physical product in because people are always going to need some place to live, right? The other side of it, though, is that when people go into foreclosure, that becomes a buying opportunity for somebody else, maybe even like myself, that takes advantage of that. And obviously the bank, because the bank want to continue to cycle properties because they know that as long as they lending money and they taking money and they getting money and all of that other type of stuff, that is going to translate into more fees, more interest, more money. And so they're incentivizing a lot of times for this stuff to happen when it happens because it's just a part of life. Now, the question that I have to ask myself is, how many people are house poor? How many people are house poor? There are so many people out here in these streets that do not and cannot sustain themselves, and they are in over their head because they bought more house than they can really afford. They're in over their heads and they bought more house than they can afford.
Dallas Morning News. Javier, always very good to see you. So despite this surge, U.S. foreclosures, we should mention, do remain well below pre-pandemic levels. Given all that, though, what factors are behind this recent rise we're seeing?
Yeah, honestly, it's not just one thing or the other, but one big reason: inflation. It's a stealth tax on everything. And when prices rise, and it inevitably triggers a bunch of series of trade-offs, especially for the working and middle class. And because housing is more than just one monthly payment, there's all sorts of costs associated with home ownership. The things you can't control: plumbing, maintenance, storm damage, insurance. That's a really big cost. All of that costs money in an era of high inflation. It just costs more than it used to. So, for example, there's a statistic that single family homeowners with a mortgage today pay on average nearly $2,400 more a year for property coverage. That's up nearly 70% from 5 years ago.
Now, let me add some context into that, right? Because they will say, well, single family homeowners pay nearly X amount more for whatever it is that they got going on than they did before. Well, it depends on exactly where you're located also. Because I will tell you that if you go over to California, it's going to be a completely different conversation than if you over in Ohio, right? If you over in Miami or you down south, then it's going to be a completely different conversation than people that are over in Las Vegas, for example, right? The context is what matters. The details is what matters. Where you're located is what matters. I think that there are several different places that are ideal for investing in if you are an investor. I prefer and I recommend to people always, if you are looking to have a place that is still going to be standing and is not going to be washed away by hurricanes and not going to be burned down by fires or torn off by earthquakes, chances are you probably need to go up to the Midwest. The Midwest, in my opinion, is probably the best, if not, well, everywhere except for Chicago, Chicago is the poster child for how you're not supposed to do things because they're about to raise property taxes in order to try to cover some of the deficits that they got going on in the city to prolong and try to stave off bankruptcy. But most of the places in the Midwest is dope. Milwaukee, skip over Chicago, go over down to anywhere in Indiana, minus Gary. You can move over to Chicago. Cleveland is a beautiful place to invest in. It's a lot of money up there. Detroit, Pittsburgh, you can start moving over to the east. I think that New York is about to become a hellhole, especially with the socialist communist thing. And it's absolutely a horrible place to invest in as a person that wants to rent property out. But most of the places in the Midwest, I mean, you can even go up to Tennessee, right? Tennessee, down there in Tennessee, it's really good down there in Tennessee. I think that Atlanta is going to be great. Atlanta's going to be fine. Stay away from New Orleans. Stay away from Louisiana. Whatever you do, do not invest in Louisiana. Stay away from Florida as a investment property. Stay away from California as an investment property, and you'll be fine.
That's a huge difference for people's budgets. What are the options that people have if they're struggling to keep up?
And I don't think that Chicago is going to be bad forever. I'm just not sure if it's going to be good within the next 10 years. Got to wait for them to file for bankruptcy, go into receivership, get a city manager, and discharge some of their debt, get their streets back, all of that type of stuff. Chicago need better leadership.
These payments.
Yeah, there are a slew of, believe it or not, the government, which of course is now shut down, has a number of foreclosure assistance programs to help. HUD and FHA have loss mitigation programs. It's designed to ease financial hardships. Cities and states also have their own sort of programs, nonprofit counseling that'll help cash-strapped borrowers.
No, Eric D., Chicago will not be fine. Their property taxes is too high, and the valuations is too high, and they looking to tax rich people, and it's going to become more of a burden on the people that's still in the city. They have a large population, so it takes longer for them to suffer, but when it suffers big. They have disinvestment in the state of Illinois and in the city of Chicago. I just heard Brandon Johnson just the other day talk about how he's looking to raise taxes because more people need to pay their fair share. That is the biggest recipe for disaster. That is the biggest red flag. It's the biggest red flag. I don't think so. The Magnificent Mile is experiencing historic vacancies. Brick and mortar stores are leaving. It's not as much innovation inside of the city. You're not enticing business owners because you got more competition all over the United States of America. I'm telling you, listen, you can risk it if you want to. I'm looking at it from an investor's perspective, okay? I'm looking at it from an investor's perspective. If you are looking for a place to live, that is much different than looking for a place to invest, okay? Let me separate it for you. If you are looking for a place to live, that is much different than looking for a place to invest. If you was looking to invest, remember when I told y'all to stay out of Florida and that all of the properties was going to be having a downshift and a downswing and all of this other stuff? It's the same thing, bro. Anton, would you live in a condo in general? Yeah, I live anywhere. It really don't make no difference to me. I don't care about that. Like, I would live in San Diego. I wouldn't buy a place in California. I need to be able to move around. You know what I'm saying? I need to be able to get out. I don't want to be stuck. If you go to rent out a property in California, their laws and the squatter laws and all this stuff is horrible. It's horrible. And it's out. It needs a correction. It's up for a correction at some point. Investing in something is much different than living there. Is it okay if you to live in Chicago? It's okay for you to live anywhere. I think it's fine to live in Miami. I think it's fine to live in New York. I think it's fine to live in, and as long as it's, when you start getting to a certain amount of money, you don't want that as your primary residence. So you want to be careful with that. I think it's cool to be a snowbird, staying in certain parts of California. But if you're looking to invest in a specific area when it comes to real estate, all of those places are red flags. And you know that just by looking at the insurance companies. The insurance companies is like, we're going to pull out of here. We don't want to do business over there. You know what? That's not really a smart idea. It's a different conversation. I think that no matter where you are, it doesn't matter if Chicago filed for bankruptcy, right? And you live there, you're going to be fine because your home is just a place where you have a roof over your head so that you can have some stability and then also be able to live your life and do whatever it is that you need to do. It doesn't matter if they file for bankruptcy, even if you got a home there. If you're looking to invest in a place, you're going to have a completely different conversation.
And a lot of people sort of tend to go into hiding whenever they owe money, and that's not a good idea because when you're behind, you can contact your bank or your mortgage issuer directly because they have their own sort of forgiveness and grace programs to address some of these hardship cases, and even if it's just temporary.
Javier, you bring up the shutdown. How does the shutdown here impact mortgage rates and the real estate market?
Yeah, it's a subterranean economic effect. It kind of depends on how long it lasts. Basically, the shutdown is a source of uncertainty in markets, and that helps drive rates higher, which of course is bad, or lower, which would be good to help kind of stimulate demand for mortgages. Right now, thus far, we haven't seen much of an impact on rates, but the longer the impasse drags on, the more the uncertainty rises, and that's just not good for rate stability.
Jay Reed says, Anton, would you purchase a condo and deal with them HOA fees? Absolutely not. Absolutely not. No way, no how. Especially in a condo, never. Never, ever. I've seen so many people get liens placed on their houses. Heck no, it's another fee. It's like sometimes it's even paying a second mortgage depending on how the HOA fee is. Nope, I don't believe in that. I believe in just having the property outright and minimizing the additional costs that come along with it. Absolutely not. Absolutely not. Never. No. But that's just me personally. Some people don't mind it. I see a lot of people get in trouble as a result of it. Nope. Nope. I would never pay HOAs. I only have one of all of the things that I have. I refuse to do. I only have one property that got an HOA fee. Jay Mill says, congrats on the mill. Are you buying off market houses in Detroit? Are you buying off market houses in Detroit? I'm thinking about setting up some marketing out there, direct to seller, and want to get your criteria. All of the properties that I've been buying in Michigan has been in Metro Detroit. So it's been in all of the surrounding areas. Although I will tell you that I was out and about and I wound up getting into a conversation and negotiating. I think her name was Natasha. She was a white girl. And I was looking at some properties in Detroit. The problem is that, well, I ain't gonna go into that because I've been looking at them. I was literally in the city yesterday. Looking at land for sale. So it's starting to get pricey in the city though in certain areas. If you're in the areas that's the most desired, anywhere downtown, midtown, Corktown, all of that stuff, it's going crazy. It's going crazy. I seen a property that 10 years ago, it's 2025, 13 years ago, you probably could have got that property for less than $80,000, $70,000. You know how much that property sold for? In the city, $650,000. I was like, wow. It's crazy what's happening. So much money to be made. But you just got to know what you're doing and you got to know the area that you're investing in.